From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for December 8th, 2015. Just a moment, we're going to be taking a look at the GBPUSD, the Greater British Pound, versus the US dollar for today's trade analysis. But first I want to recap a couple of things we talked about in yesterday's live trade room. Starting here with the AUDUSD, the Australian versus the US dollar. I want to zoom out to the weekly chart first off to give it a longer term vantage point for this currency pair. That's the long term downtrend, the black trend line you see coming down from the top of the chart. This pair has been in a downtrend for several years, and you can see at least going back to 2014, but even down back to 2013, you can see the downtrend has been clearly in effect. I don't think we've seen any indication yet that that downtrend is going to change. Everything still points to the downtrend, and no technical indicators telling us that this downtrend is going to change. So we go back to the daily time frame. We've been talking about this purple shaded area, the top shaded zone on the chart, as a resistance zone over the past 1, 2, 3, 4, 5 days. We saw resistance into 73.40, 73.75. As the market held underneath there was an expected resistance, and now we see that fall coming back down in towards the 7100s. We talked about these two black boxes yesterday in the live trade room, the congestion, the support resistance found within there. So within that, we see the yellow shaded area finding support on the far left-hand black box, the yellow shaded area finding support in the center black box, and you can see resistance at the purple zone. Yesterday, we were talking about the fact that we could see something very similar to that, but watchful for clues to support and reversal to go back up, but also clues to a breakout to turn back lower for this currency pair. And as you can see, it found a little bit of support yesterday, but nothing really significant, and now has broken down through that yellow zone. With some negative news out of China on trade balance, we see this breaking through the support and pushing down towards the next support level, which is down here towards the 7200 level, the orange shaded area. Let's zoom it in one more time here, and you can see that orange shaded area. Not only do you have historical resistance and support into that area, a pretty important area for the Australian dollar, right around 7200, you also have the 100 daily moving average sitting in there. So I would suspect that today we will see some support into here. We also have the 50% retracement level from the low to high of the last trend run up, all sitting right around 7200 here for the Australian dollar. So I would suspect there will be some support here today. Not a great place to go short. If you're looking to go short with the run we've seen over the past couple of days and that negative news we saw out of trade balance out in China, if you're looking to go short here, of course, it would be preferable to see a rally into resistance first. That would be now the yellow zone, as you can see right here. Support at the orange zone, resistance at the yellow zone. You can even see some of that back here on the left. So if you're going to go short, this is not the place to do it. You want to wait for it to go back up to the yellow zone. That's the better risk-reward option for the currency pair. A break back above the yellow shaded area, of course, we look for it to go back up again. I would suspect also if it breaks down through the orange shaded area, the 100 daily moving average, we'll likely see it all the way back down here towards the 7100 level. That's the blue shaded area, and by the way, the bottom of our red triangle pattern that we've been studying in the live trade room. 4-hour time frame, you go over here to the yellow zone. Take a look right here. We were watching for clues to reversal. Never really gave us a good clue to reversal. It had some hesitation in there, but not any good clue to reversal, so we didn't take into the buy good news because it broke down through that yellow shaded area. Zoom it out one time. Again, the orange zone becomes your next clue. You're watching for support here. Potential clues to reversal here into the 7200 level sends it back up to the yellow zone. Again, if it doesn't give us clues to reversal like it didn't here at the yellow zone, a breakdown of the orange zone continues to pressure back down here towards this blue shaded area down here towards the bottom of the chart, and the bottom, by the way, of our red long-term triangle. By the way, go back to the weekly. There it is down there, those two red trend lines at the very bottom of the chart. Back to the 4-hour, that would be all the way down there towards the blue zone, 7100. So if you're looking to go short, sell this currency pair closer towards 7250, 60, that's the yellow shaded area. Target the orange zone on the way down to the blue zone. If you sold the purple shaded area all the way at the top, which we had a few folks in the trade room talk about that yesterday, protect more profit. All right, moving on to the GBPUSD, Great British Pound versus the US dollar. Clearly, we have been talking about this falling range or falling wedge, if you want to call it that, over the past several weeks in the live trade room. Red trend line clearly down. Black trend line is also clearly down, so we see falling highs and falling lows. That's the direction we've been focusing most of our efforts in. It's been in a little period of congestion in this black box right here over the past several days. We did get a dip down to 49, a rapid reversal, but now we see it taking another turn lower in the direction of the trend. I was hoping to see it push a little bit higher, zoom it in a little bit, push a little bit higher towards the red trend line into the 5200 level, but never made it past the 5130s or so. So unable to make it back up there. It's now started to work its way back down, retracing much of the move from last week. Let's take a look at this green shaded area. Zoom it in one more time. Take a look at the green zone. We saw support on the left-hand side of the low. We were looking for potential support there over the past several hours, looking for potential support into the 5,000 level. It has not even shown any clues to support or reversal from that level, so we're not in a buy. But for the day today, we are looking for the breakout clue underneath the green shaded area. Breakout clue would be an open and close, a single candle body that opens and closes under 5,000, gives us a clue. It's going to continue to pressure back down towards the 4,900 level and our last lows, and maybe even making a new low. We take it down to the 4-hour time frame. We could see even here on the 4-hour time frame, not yet do we have an open and close underneath the 1.5 thousand level. That will be my trigger for this currency pair. I'd like to see an open and close under 5,000, maybe even a rally and retest the 5,000 underneath it as resistance to give us a low risk, high reward opportunity to target back down to 4,900. That's the orange shaded area all the way at the bottom. Now, if today, maybe even the current 4-hour candle or the next 4-hour candle gets back above the green shaded area and turns back higher above 5,000, that could be our first clue and sign of reversal that we're looking for it to go back up. So two things to watch for. Either an open and close underneath 5,000 to give us higher confidence that it's going to continue to go to 4,900, or a reversal back above 5,000 in the green shaded area gives us clues that it's going to turn back higher and start to work its way back up, maybe even towards the 5,200 level that we've been talking about over the past few days. One last thing here before we move on. Fibonacci from the low to the high of the last run there that we see, from the lowest low on the chart to the most recent resistance high, puts the 618 at 49.94. Guess what? We're right underneath that right now. So again, a break of the 618, we have a clue that it's going to head back down to the mid or the low 4900s for the pound dollar today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.